You know, it's so funny you bring up semis right now. Of course, NVIDIA earnings are coming up. Such a big and important stock, not only when it comes to its weighting, 6% of the S&P, 7.5% of the triple Qs, implied volatility, 10% to the upside or downside, but it's also sentiment. So if there were any other time, maybe the cyclical trade could just keep going on, unabated completely. But do you think NVIDIA has the potential, at least, to move money back into tech if this report is better than expected?
Yes. I mean, one of the stories of this earnings season has been the kind of, growing skepticism about the immediate profitability of the AI trade, whether all this spending, actually has applications for consumers and businesses in the near term. I think everyone kind of believes in AI as a secular growth trend long term. NVIDIA's report can change all of that mixed sentiment and I think start to pull money back into AI if it shows another one of these blowout quarters that, people are talking about AI and pulling forward some spend, and there are applications, and they are such an important stock, and what they have to say on AI is so critical. I think it can change sentiment on the whole space overnight.
We're talking about sentiment for a minute. UBS out with the note talking about the quote unquote whisper number when it comes to NVIDIA. So estimates have Q3 revenue coming in at about $31.5 billion. The whisper number is $33 to $34 billion. We're showing it on the screen right now. In your mind, does NVIDIA have to get to that whisper number to reignite that tech trade, or is simply just meeting, again, sky-high expectations? Is that good enough?
I do think we're at the point where meeting expectations is probably not enough. We've had quarter after quarter of blowout growth. The big tech stocks have had a really aggressive move on the back of this AI sentiment over the last, year and a half, 2 years. So I think to keep the move higher, and especially to reignite a rotation into tech stocks and out of that cyclical trade that's built on the back of a soft landing and lower rates, you have to continue to beat expectations. You have to, come out with aggressive guidance, and you have to really speak on the earnings call, about this optimism and kind of counter some of the updates we've heard from other big tech and AI linked conglomerates. So you probably have to beat by a significant margin. And I think the guidance is really important too, because people are starting to get skeptical about those near-term applications.
All right, let's now bring in Degas Wright, founder, CEO, and CIO of Decatur Capital. He's also a CNBC contributor. He and Decatur are NVIDIA investors. Degas, good morning. Good to see you.
It's good to be up with you, Frank.
All right, let's get into it, Degas. We heard what that retail investor had to say. I want to ask you, are you a believer in the fundamentals of NVIDIA? Chips, huge moat when it comes to the AI space, or are you more invested in the vision of Jensen Huang?
Well, we think that's a good strategy because we're using the managerial ability index, and it quantifies a CEO's contribution to a company's operating efficiency. And we see with Jensen, he has actually led this company for 31 years, and we would expect a high ability CEO to produce higher quality earnings based off their knowledge of the industry.
All right, so a lot of it for you is the confidence in Jensen Huang. He's kind of becoming like an icon. You heard the other person just call him Jensen. He's like on a first name situation, a mononym at this point. I want to ask you about something else. So investors, sky high estimates when it comes to NVIDIA when they report after the bell tomorrow, more than 100% revenue growth, more than 100% EPS growth. At the same time, we're getting kind of whisper numbers about their guidance. I'm going to show this to the audience and you. So the street estimate for Q3 is about $31.5 billion in revenue. The whisper number, according to a UBS note and a lot of people talking, is 33 to 34 billion. Now, do you believe that whisper number is largely based on confidence in Jensen Huang and the fact that he has been out there? He hasn't been hiding out. He's been very vocal about his confidence about not only the company currently, but about its future.
We do, because ultimately, if you look at the free cash flow to return on invested capital, it's 76%. So this is a good platform to be able to hit those numbers.
All right, so there's also the law of big numbers, Degas. I mean, sooner or later, NVIDIA is not going to be able to more than double revenue, double EPS. If and when we get to that point, we got to say if and when because you don't really know if and when it's going to happen. Does that change your view on NVIDIA? If they happen to miss estimates this quarter or coming up quarter, does that change your view on NVIDIA or does that change your view of Jensen Huang?
It actually doesn't change either the NVIDIA or Jensen Huang because we're looking at the fact that he is a visionary, as been stated, and he's doing so well in the way we measure it. If you look at one aspect, he has over the last 3 decades invested almost 20% of revenue into research and development. So that's going to pay dividends much more into the future.
Any concerns about an investment strategy based on a personality, even if that personality is the CEO? I think Tesla investors have seen quite a bit of volatility. A lot of people believe in Elon Musk, and even when certain things don't happen, announcements don't happen on time, or vehicle releases don't happen on time, they continue to believe in his vision. Is there any downside risk when it comes to investing based on your confidence in the person in the C-suite?
Yeah, two things. One, market sentiment could definitely go against the measure. And also, we're using proxies to measure CEO's ability. And that may be an inexact science.
All right, maybe an inexact science. So you don't see any immediate downside risk. Overall, as you continue to believe in this company, it does have a very big moat when it comes to AI chips. A lot of people also just believe that, as you said, Jensen Huang's just a visionary, been leading this company for 30 years. Are you concerned about being a long-term shareholder if and when he decides to step aside? Are you worried about succession plans and things like that?
We're going to have to cross that bridge when we get there. So if Jensen Huang has done such a great job of building the company, we believe that he's going to take the next step and find that successor that's going to continue NVIDIA's run. All right.
Diga's right, NVIDIA investor, believer in Jensen Huang. Next time I see you, if they beat, you got to wear a leather jacket on the show. Digas, you got to wear a leather jacket. Good to see you, man. Always a pleasure to see you. All right, so you got to be nimble. So coming up, we have a big event, NVIDIA earnings. I just want to get a sense of how you see NVIDIA earnings. You actually gave us a playbook if NVIDIA misses. I'm not saying that you're saying it's going to miss, but if it misses, you're focusing on three factors: median sector performance during cut cycles, which we believe we're in right now, rolling annual correlation to the U.S. dollar, also median sector performance after the yield curve uninverts, so very close to it uninverting. What are you looking for? What are these three factors? What are they going to help you find when it comes to stocks?
Yeah, let's be clear. NVIDIA is our largest position. It's kind of leg in leg with Apple and Amazon. I'm pretty heavy tech in how I'm positioning portfolios on our wealth side and Blue Line Capital. And I hope to see a solid report here. I think they can. I think the Huawei data that we've seen from them kind of falling behind on providing to the Chinese companies, and what NVIDIA's talked about with the China-centric regulated chip here coming out of the U.S., I think that's important. I think they have a strong report. But if they miss, I think, you have to look at other places, healthcare, financials. One of the things that we're really liking to lean into is materials. And those three factors that you just discussed that we're looking at really favor materials. So we're kind of looking at contingency plans. If NVIDIA misses, or if the market interprets their report poorly, it could put tech on hold for, a couple months.
Well, as we mentioned, NVIDIA reports results tomorrow after the closing bell. Joining us right now with more on what we can expect from the chip maker, the potential impact on tech stocks, what Wall Street is expecting, is Ray Wang. He is Constellation Research Principal Analyst and Founder. And Ray, really good to have you in studio with us. What is Wall Street looking for? What does NVIDIA have to deliver?
Well, at the moment, they're priced for perfection. And so everybody's waiting to see, will the Blackwell chips be delivered on time? Will they not? What's going to happen going forward? And it's all focused on the forecast. When we do market checks, we see that the earnings are going to be pretty good because almost every tech company has been actually investing in data center chips and in the AI chips. And on the other hand, every company budget, when we talk to our 1,000 CXOs on the market, everyone robs cybersecurity budgets to pay for AI.
This is the point I wanted to get to. We're going to talk more about NVIDIA in just a second, but that came as a shock to me, this idea of robbing Peter to pay Paul when you're taking money out of cybersecurity and putting it into AI. Is this going to be a mistake that they all look back on later if there's a huge cybersecurity attack or something that gets through?
Well, the big thing that's happening in cybersecurity is about post-breach resiliency. You know you're going to be breached. Are you better at actually recovering? And so they're making the guess that AI might get them faster to cybersecurity as well. So both are happening.
So it's not necessarily robbing Peter to pay Paul. This is a situation where you're beefing up AI in order to try and help your cybersecurity situation?
Exactly.
Okay, that's less scary to me. That makes more sense. If we are already priced to perfection, but your channel checks are telling you that things are going to be really great, you anticipate the stock's going to go up? Will it be enough of a boost to actually impress the street?
Well, it may impress the street, but it's not going to bring anyone else with it, because what's happening here is unlike the internet. Right? With the internet, it was open, it was decentralized, there were lots of players, things were coming down in price. Here it's the complete opposite. NVIDIA's done a good job. It's centralized, it's closed, it's more expensive. There's only a few players that are going to win, and that's why the stock will do well.
You own 5 of the big Magnificent 7, right? Which
Actually,
ones are they?
6. Actually, I have a couple other ones as well.
So Apple, Microsoft, Google, NVIDIA, Amazon.
Tesla.
Oh, you own Tesla too?
Yes.
Okay, so that's the one that was missing from this list. Which one are you not? Do you not own?
I think I've Meta as well, actually.
Are you Meta? So you own all of them?
I own all 7. I do own 7.
And you believe that this is the right thesis to keep carrying the market at this point?
We do for now, and especially with interest rates coming down, that's actually going to help as well. A lot of people think it's going to go to EMs when interest rates come down, but actually it's not going to look that way. Aside from India, it really looks like big tech is your flight to safety and your flight to growth. It's kind of like buying GE back in the 80s.
We had a guest earlier who was talking about the separation from China, looking at places like India as a place to invest instead for many of these American companies. Does that impact any of the big 7, the Magnificent 7?
No, not as much. And what's interesting about India is it's actually a market that's growing. The population dynamics are in their favor. China has the inverse population dynamics that makes them look like Japan in 20 years.
Really? So what could be upsetting to any of these stocks? What would make you sell any of the Mag 7?
I think when it comes down, when forecasts are no longer growing, if they're losing market share in terms of adding products, they can't add services, they can't add experiences on top of it, they're not seeing that linear growth on the monetization. Because in digital, you grow by ads, search, goods, services, and memberships. And if you don't get into all 6 of those, you'll actually end up dying. And you notice everybody that was good in ads started getting into memberships. Everyone was good in memberships started actually putting out products. And that's the progression of digital giants.
Lower rates, lower interest rates is good for technology companies unless it's coming with a recession, a big recession that would hurt corporate spending. How do you kind of play this? What's the sweet spot?
What people aren't realizing is the number of job layoffs going on in the Valley. And these are real, and it's actually AI replacement that's actually happening. So some companies I talked to are taking operations where they have 15% automated today. They anticipate it's going to be 70% automated. They started that at Meta, and that's actually flowing everywhere else in the Valley at the moment.
How much NVIDIA, how long have you owned NVIDIA? Have you been buying more along the way, and what would you do based on tomorrow's earnings?
I have to go back and see, but we are buying along the way. I'm buying the dip.
Okay.
The price target there is about 180.
Okay. 126 is where it stands right now. Ray, thanks for coming in today. Really
Thanks a lot.
Can I talk to you from the bottom up? How about NVIDIA? Any thoughts?
I mean, I think NVIDIA is going to be something that gives some momentum this week. It's probably going to beat expectations. That's going to continue people to feel that we're in a recovery mode. I think from our side, those of us that followed the technical signals across different asset classes, there's still a lot of concern for us in the sense that equity signals have become more noisy. We do expect more choppiness around as we move into the potential cutting season. So I think that investors are just a little nervous about what's going to keep equities at their highs.
And yesterday was not a good day, really, for the NASDAQ, certainly not for tech, and it does seem related to perhaps some concerns about these NVIDIA earnings that will be here tomorrow after the close?
It's twofold. One is NVIDIA, because people can't game it, so therefore they want to sell it. That's the mindset. The other is that there's just not enough money coming in. Back market with a good piece about money coming out of the market today. And what's happened is that typically when you have a Fed cut, you have money going in, and it goes into the hot group, and then it doesn't come out of the not so hot. It actually goes in a little less. So typically what would happen is that you would have some upside to the tech stocks, but the big upside is to the General Mills and the Colgate, and also to the utilities, and of course the Toll Brothers. That didn't happen yesterday. What happened is that it was entirely money out of a sector. And then money into another. There's not enough money coming in, even though rates are coming down. People are stuck in the 2-year. They love the 2-year.
And why not? But there is this belief somehow that as rates come down, people will flee the money markets, in which they've been getting a nice return, so to speak, certainly versus what they had for the 10 years prior, and will enter the equity markets again. Does that actually happen ever? Does history ever show that that does?
Yes, it has. They can flood the equity markets, but you need to have corporate buybacks be bigger than they are. They've slacked off. And then, David, you have to have sudden rate cuts. Because right now, if you have a quarter rate cut, big deal. That's not going to flood the market.
People are not going to leave money markets.
No. And, and we should talk about this NVIDIA, because NVIDIA is obviously weighing on everybody's mind. The idea that this one stock and this one report could be so crucial seems fatuous to me. fatuous because you know that there are some companies that are doing quite well with AI. Meta, for instance. You know that there are companies that are trying to do cheap GPTs. You know that there are companies that are awaiting the Blackwell. You know that the demand is high. So what has to happen? I'm going to put the Jensen Huang question, which is that what does it mean to be constantly so examined, so microscopic that it carries the market? I don't think he expected that. I mean, yesterday I got an email from someone who said, I've had enough. This guy is costing a lot of money, which is very rare, because he keeps he keeps selling a lot. Well, it's true. He does sell a lot of stock.
Jensen Huang sells stock.
He has a lot of stock.
He has a lot.
Now, I guess he's supposed to go to his grave with like a huge position. I mean, what is the point? Any estate planner would say, good job. You're not affecting the market. You're not just slamming the piece down. But no, I mean, I'm saying that there isn't anything about NVIDIA that right now isn't under scrutiny, and the long knives are out for NVIDIA.
But it may be because it's reasonable.
$3 trillion, and it was $500 billion just 3 years ago.
Because it underpins all of the AI hopes and dreams.
AI hopes.
Period.
Okay, so
so if in fact it does not have the guidance that is anticipated or does not exceed, it will in some way be a reflection of the fact that those hopes and dreams are not going to be realized in at least the time frame that the market somehow expects.
I like your analysis. I think that one of the problems is that we can't visualize what Jensen can see. It's almost as if it's an invisible man to us, but he hasn't fully formed. Because when he has a team, a robot team, and he has a team that is just based on basically what humans are like. Because remember, Jensen always says, we can't have robots that are not like humans because everything's designed to be human. But you can make robots. We just don't know what to do with them yet. I mean, if robots are going to just deliver us coffee, we don't have... Hold, wait a second. If you're going to deliver it at Starbucks, that's pretty good. They can wait online.
Could change everything.
I think that could be what this whole robot thing is about, is waiting in line behind someone who's triple venti cappuccino with skin wet, 5 pumps.
It's not a question of when. It's not a question of whether this future is coming in some ways, but when, Jim. And the markets are still trying to figure that out and discount that. Well, and that's why we had an enormous rally for a period of time.
What happens if...
By the way, Morgan Stanley today, Katie Huberty, who you like,
the chart
and her team,
an eye on?
Our global tech team projects the big four cloud service providers will generate $176 billion of operating cash flow in calendar 2025. And note the average AI CapEx EBITDA ratio roughly 40% in 2024, suggesting the hyperscalers' pockets are still deep enough for further spending.
Well, look, I think that we have to...
And therefore, don't worry about NVIDIA's upcoming release. U.S. semiconductor analysts expect to deliver a strong beat and raise, dispel concern, and drive share price rebounds for the overall AI supply chain. Those are some pretty bullish words.
It was very bullish, and I wanted to hang my hat on it. My problem is that if you're on a Jensen Huang call, it's mostly Colette Kress, the fabulous CFO. There's very little hype in the call. There's very little... the last call actually was the most bullish NVIDIA call. It was a little different.
What's your point of mentioning that, though? So what do you mean?
Well, because the actual tone is going to be incredibly important.
When
you have this minutia call, you have to wait. Will Colette Kress, for instance, say with the possibility of enough cash building that they have to do a buyback of humongous size that could buy back almost 10% of the stock? That could happen. Luca Maestri,
You want to move on to Apple?
Well, I just say he was the one who said, look, I've got to accelerate the buyback.
Right.
And he was
there
a buyback accelerator.
Let's turn to Apple. How important are these NVIDIA earnings that we're going to talk about endlessly between now and when they come out after the bell tomorrow?
David, I think they're pretty important. I mean, I think, again, go back to middle part of the year, S&P was up 15%, and 5 percentage points of that gain was NVIDIA alone. The rest of the Mag 7, another 5%, the other 493, 5%. So there's no question from a basic index weighting perspective, the importance of NVIDIA is very clear on this. But I think in terms of what I was getting at earlier, this AI spending and AI productivity enhancing tailwind, I think we need to continue to see evidence that that's playing out. So it won't be the earnings result per se as much as it is what we're talking to in terms of a guidance going forward.
Turning to NVIDIA, the street betting on big moves in the stock after the company reports results tomorrow. The options market pricing in a near 10% move in either direction, with bets skewed actually to the upside. Joining us now is Susquehanna's co-head of derivative strategy, Chris Murphy. Chris, how would you say this positioning compares to prior quarters for NVIDIA?
Well, it's one of the most actively traded earnings you're ever going to see. So there's a little bit of everything. If we were to pull out one trend, it would be selling puts on the downside. The downside's a little bit offered. So what that's telling you, as you can obviously look at the chart on the screen, some people have missed the NVIDIA rally. They are willing to buy on a dip. And one way to represent that is to sell puts on the downside. So like I said, you see a little bit of everything in something that trades as much as NVIDIA, but that would be one trend that I could pull out leading into this earnings.
How do investors typically utilize options here? Is this something where they hold exposure to the shares themselves and then use options to hedge? Or is it fair to kind of read this as a directional bet per se, or is it more of a kind of piece of an overall portfolio construction looking at NVIDIA?
Piece of the overall construction, I would say that it's a great situation for options liquidity when you have something that trades as actively as NVIDIA. You have call buyers on the upside looking for continued momentum. You have those who are long looking to take advantage of that 9% move by overwriting. They're offsetting to a degree. You do have some hedging, a little bit overwhelmed on the downside, a little bit overwhelmed by those who are selling downside puts that are willing to buy dip. So, because NVIDIA is so actively traded, you can use the options market not just to pull out that 9% implied move, but you can also pull out the probability of, let's say an up 20% move versus a down 20% move. And kind of what you mentioned is the options market is pricing in higher chance of an up 20% move than a down 20% move, mostly in response to the trading flow that I mentioned.
The stock is up, Chris, 40% since the August the 5th low. Obviously, that's a striking move for most normal stocks. Is it that striking for NVIDIA? And when it's come off the back of such a quick surge, does it change how you look at things and change the action that we're seeing?
Yeah, when we're able to have an opportunity where we think we can recommend volatility at a fair level in a name like NVIDIA that moves around a ton. Once again, you can point to, yeah, sure, it's a 9% implied move. But if you look back at the last couple of earnings, you have a up 24% move a little more than a year ago. So, if we see sharp moves like these and, the general trend since the August low was selling volatility in aggregate across everything. So, when we think volatility is coming back more towards a fair level, we're biased to recommend going long, especially when you get, the 24% move one out of every couple earnings.
That's a good point. With NVIDIA, 6% of the S&P 500, even if you miss the rally or you don't have exposure to NVIDIA, this impacts the market in a very big way. Thank you, Chris. Appreciate your perspective. Let's turn to the earnings report of the week, maybe even of the quarter. NVIDIA set to report after the bell tomorrow. Our next guest is sticking with the stock as his overall top pick into earnings. Joining us now is Morgan Stanley's Joseph Moore. Joseph, thank you for being here. So curious, obviously the Blackwell timing delays, you see that created a buying opportunity as expected, but the market looked through some of those concerns. Is there something that they could say on the call that you think the market would sit up and pay attention to in a way that is a risk to the stock?
Yeah, well, I think that the Blackwell delay is pretty minor. We're going to get a little bit of volume in October. We're going to have reasonable ramp in the January quarter, which means they can kind of stick with the language that they've used, which is kind of first volume in October and a ramp in January. And importantly, the demand hasn't faltered at all. There's been a very quick pivot from customers who were looking at first stage Blackwell implementations, have just gone back to products like H200. And the fact that we're not building as many Blackwells has freed up that supply. So I think the market would be alarmed if there's any bigger delay than that, anything that takes longer to resolve than that. But clearly, expectations have come up meaningfully now. 3 weeks ago, people were really worried about any potential delay in product. And I think it's become clear now that numbers are quite good. So there's an expectations issue, but the underlying demand is very good. And the execution here is very strong. I think people will, look through a small delay in the initial ramp.
How long do you think that this demand stabilization can last? NVIDIA is essentially a monopoly when it comes to AI chips, and it's benefited from a lot of momentum based on that. But as you kind of look at the competitive landscape, do you see anyone anywhere close in a way that could really take aim at the pricing power that NVIDIA has enjoyed for so long?
Well, look, I think there's a lot of exciting alternatives to NVIDIA in the marketplace. AMD's competing merchant products. You have custom products from Broadcom and Marvell that I think all will have a nice place in the market. But I think NVIDIA's execution here has been very strong. We expect them to at least hold share in 2025. So I don't expect those opportunities to outpace NVIDIA's growth because of the performance that they're delivering with Blackwell. So to me, when this story kind of starts to decelerate, it will be much more just the overall spending patterns. These numbers have gotten so big so quickly. I think that's the bigger risk. I think competitively, certainly there's a lot of alternatives out there. We evaluate everything that comes out, and there's a lot of companies that will benefit from this. But we think NVIDIA will retain this kind of 90% kind of share on AI processors into 2025.
The market is clearly waiting around for the big event, which is going to take place tomorrow. I don't need to tell anybody about NVIDIA reporting earnings. Everybody knows it by now. But what do you think is on the line here tomorrow in overtime?
So last week we talked about how high the expectations are. This is a company that's going to grow earnings and revenue by over 100%. It's also a company that has continued to raise the bar 6 straight quarters. This would be the 7th with both top line, bottom line beats and increased guidance for the rest of the year. So if they can do that again, it'll absolutely justify where the stock is, but it's a big if. So I've talked a little bit about how important it is that the other companies that serve as NVIDIA's biggest customers have all talked about nothing but full speed ahead. We heard from Microsoft on CapEx. We heard from Meta on CapEx. Neither one of them have given any indication that they're lessening their orders to NVIDIA. And here's why that's so important. 45% of Microsoft's CapEx is going to NVIDIA. I know that number sounds insane, but that's Bloomberg data and it's real. 19% of NVIDIA's revenue comes directly from Microsoft's CapEx budget. So we have that we have that in the bag, so to speak, from the buyers, the 5 companies that buy about 40% of whatever NVIDIA sells. That being said, guidance is going to be key, and it's hard to keep raising the bar when you get to numbers the size that we're discussing. So I'm in the stock. I'm confident that we'll get a strong report. I can't tell you how the market will interpret whether or not it was good enough. But long-term investors here know any quote-unquote earnings disappointment from NVIDIA has been an unbelievable opportunity to buy over the long term. And, maybe that's the better way to be thinking, not what bet do I make ahead of time, but how do I react after the fact?
Yeah. So, there's long-term shareholders, then there's new ones like you, right, who use the recent dislocation in the market to establish a new position in NVIDIA. So what's on your mind heading into tomorrow? Because your perspective is probably different than somebody like Josh, who's been in it as long as we've feel like almost had the show.
So we've been long a lot of semis outside of NVIDIA, and we're still underweight the index even with the NVIDIA purchase. I think we took advantage of what we thought was an oversold opportunity given the demand that Josh just spoke of. I'm not so much watching what they're going to say, because the reality of it is they're going to say the same thing they always have. The demand is so significant. What I'm watching is the price action after. And the reason that I'm watching that is because if we start to shoot the generals that have led this market, which is the semis, and I have no reason to expect that's going to happen, but everybody that's invested in these, don't forget, they are cyclical, right? And when you shoot the generals, we do have a forward problem, Okay, so we think it's going to be all good. But you really have to watch price action. Of course, knew you would.
Yeah, go ahead, Josh.
Okay, Rob, very respectfully, we've had these tremors in the generals, in the big tech names, and the assumption had long been once these stocks go, everything goes. But in fact, it actually went the other way. The money came out of these stocks temporarily, and it went into all of the other areas of the market. And so when you
Josh,
look at the
I will
big
tell you,
correction that these stocks have gone through,
2022, you're absolutely
that's a bear
wrong.
market. I'm talking about this year.
I'm talking about what happens when they actually shoot them. Not when they sell off a little bit. When they shoot the generals.
We've seen them in big draws.
Can I finish? In 2022,
sure.
when we had the sell-off in these names that was quite significant, mind you, and they were coming with high expectations, there was only one sector that we broadened out to, and that was energy. There was nothing else. Okay? So I'm not saying we get a little sell-off, we get a little hiccup, and I agree the long-term trends are intact. No question about it, but we have to be wary when price action starts to fade, and semiconductors are the pain trade of the market. Positioning's in the 98th percentile. Where are the incremental buyers when we're in the 98th percentile? So that's where I'm pushing back as an owner and why I'm watching the price action.
Did you want to say one more quick?
I just see it differently. I don't see the whole market waiting on pins and needles for NVIDIA. I think people that are in technology stocks definitely are, myself included. But you've got a lot of stocks at 52-week highs. You've got a lot of stocks above their 200-day in real estate, in utilities, in staples, in healthcare. They have nothing to do with NVIDIA. And quite frankly, I think if NVIDIA and Apple and Microsoft bleed out $1 trillion in market cap over the next couple of days because people don't like the response, I think the money finds a home in these other areas. I don't think it goes into the void.
But you can't lose the AI general, right? I mean, the point's been made on this desk today about some of the generals, but if you lose the AI top dog in NVIDIA tomorrow, if their guidance doesn't live up to what the stock has done, especially since that move 3 weeks ago Monday, let's see what happens.
The reflex reaction would not be positive. You already have a little bit of fragile sentiment in the semis you guys have been talking about. That said, there was a time you would have said that about Tesla. And Tesla got destroyed from the highs, and the market found a way. So we'll see.
All right.
Let's talk about this back half of the earnings season. All of the big names are done except for one very important one. Some would argue the most important one of the entire season, and it's not Alphabet or Microsoft. What do we think about NVIDIA and the impact it's going to have tomorrow?
Regardless of what the results are, what's important to note is that if you look at the options, they're pricing a move up of 10% or move down of 10% for a stock that's now 6% of the S&P 500. So regardless of what your view is, it matters for macro. And even 2 years ago, it was less than 2% of the S&P 500. So it is the show, especially in August at a time where it's quiet. It could even have a bigger impact than usual.
Do you think it's, from a market perspective, because it is the probably, some would call it the second weakest liquidity, trading liquidity-wise, week of the year next to just the Christmas holidays, does it mean that we could expect even more just than the 10% that we would expect in the options market?
Yeah, I think that, look, I started my career in trading, and in August, because liquidity dries up, there's a lot more volatility that could happen with something like this. You got a lot of interns running the desk in the last couple of days.
You and I are here right now.
Yeah, we're here. But what is important to note is that actually Bank of America did some research on this. Over the last 2 years, NVIDIA earnings had a pretty influential effect on the markets, not just that day, but the following 2 weeks. So it's not just like a daily event. It could carry forward for the next couple of weeks as well.
What do we think about whether or not this story around NVIDIA is enough to either propel the next leg higher for the market or give you that concern that the AI perceived bubble by some could be due for a kind of correction?
It has a big effect, right? It's the bellwether for a lot of the other chip stocks, but as well for the broader technology sector. But I would caveat that that's looking at the next, call it, couple weeks, months. There is the fact that earnings are doing well for non-tech sector as well, and that's not dependent as much on NVIDIA. In fact, some of the other stocks that are not tech-driven have driven the rally in the last couple of weeks.
So what's your trade on NVIDIA?
Well, we've been a sell for a long time in the sense that we just believe the valuation issue is insurmountable. If the company executes perfectly for years to come, which of course they will not, the stock is overpriced. And it's a 1999 Cisco lesson for me, a little bit of PTSD. I think Tyler remembers that era well. And I will say that NVIDIA seems to me to be Cisco of the next generation.
Very interesting. I mean, I think of the stock that I associate with the late 1990s is CMGI. It just went up and up and up. But NVIDIA is a real business. I don't know that CMGI ever really was. NVIDIA is a real business. You're not biased, but your portfolio management style is what? To chase dividend growers or what?
It is to pursue dividend growers and to hold companies that have the free cash flow that is sustainable and growing, and then they are distributing more and more of that to the owners of the business over time. And so it is a bias, but it's embedded in our philosophy of investment. And a company like NVIDIA generates plenty enough free cash flow that they could be more than a 0.4% dividend payer. But I think you're exactly right, Tyler. CMGI is not the analogy I'd make to NVIDIA. NVIDIA is a wildly successful company. So was Cisco.
Yeah.
For 25 years, Cisco has grown earnings and revenues and everything else. It's just that the stock never got back to what it was in the bubble. It's a pure valuation.
Let's move on to another.
So, NVIDIA does report, as we know, after the closing bell tomorrow. It's a stock that's had a tremendous run, 180% in just the last year or so. But what if those earnings and the outlook are less than what investors in Wall Street are hoping for? Tony Zhang is the chief strategist over at Options Play. He's with us live today. And Tony, we talked about portfolio insurance and, puts and calls are the basics of options. We're talking put options or downside protection. Take us through your trade on NVIDIA tomorrow.
Yeah, that's exactly right. This is a trade that allows you to participate in terms of upside, but provide a little bit of downside protection going to earnings tomorrow. That's by going out to the September 20th expiration, buying the 124 puts, but at the same time selling the 110 puts against that. Earlier today, you can pay about $4.66 debit for that put vertical spread. And what that allows you to do is actually reduce the amount of risk that it takes to buy that downside protection by selling that 110 put down, which costs you only about 3.5% of the stock's value. And what that means is that if, let's say, NVIDIA does report far better than expected earnings and the stock jumps another 10, 15% like it has done in the past previous quarters, you're only giving up 3.5% of that upside. So if the stock, let's say, rises 10% on earnings tomorrow, you're giving up 3.5% of that. So you're netting about 6.5%. But this is a trade that's going to give you downside protection of about 14% to the downside. So if we see AI, if we see demand slow down a little bit or outlook for NVIDIA come in a little softer than what investors are expecting, we might see a bit of a decline in terms of NVIDIA to the downside on earnings. This will buy you some protection to the downside.
So, Tony, let me ask you a couple of questions here. I suspect that a lot of people who do this would be sophisticated traders who may well be executing their trades on their own at their desks at home. But if I were to call my broker and say, I want to do what Tony just told me to do, what do I say to him or her? Is there a name for this trade? Or what do I tell them quickly? I say, I want to buy these and sell these. What is it? What do I tell them?
Yeah, it's a long put vertical or a bull or a bear put spread that you could usually go by in terms of the name structure. But like I said, what you're doing is you're buying the September 124 puts and you're selling the September 110 puts at the same time. So it's the same expiration. You're buying the higher strike price, selling that lower strike price. Net, you're going to pay about $4.60 earlier today for that. You can tell your broker that and they'll be able to execute that trade on your behalf.
All right, Tony, thank you very much for that. Now, Tyler, so in essence, what we're talking about is you want to buy the downside protection that'll protect you for anything below $124 in price. But what you're going to do to make that insurance a little bit cheaper is to sell the 110 below this level to make it cheaper to buy that portfolio insurance. But if you own the stock, you still get the upside if it goes higher.
The word name for it is?
Bear put spread.
Bear put spread.
There you go.
There you go. Tom Chu. Thanks.
All right.
Is priced in, like what can you really expect from revenue growth here forward that we don't already know?
Well, you and I talked about this with Joe last week on Halftime, Scott, and I just think right now the AI trade is incredibly narrow, and I think that that's why you've seen the continued resilience. And for instance, when NVIDIA sold off after the unwind of the yen carry trade, you saw this, massive amount of investor interest and come back in and push that stock higher once again. And so I think that the challenge here is that only about 5% of corporations in the U.S. are utilizing AI right now, and so it's really about how much of the hyperscaler is going to continue to purchase, how much are they going to continue to create CapEx. And, if you look over the next couple of quarters, Scott, they're not giving you any indication that they intend to pull that back. And so at least for the time being, I think that this is the tip of the spear for AI. There's enough spending going into AI that I think people are not worried about that potential drop off a cliff in terms of demand. And so it's going to be increasingly a conversation about valuation and the next product down the line. I think 2025 is really where you start to see that potential competition for NVIDIA. But as it relates to the second half of 24, they really are sitting in a position where that demand is likely to continue, and the competitors just aren't quite there yet to be able to unseat them in a meaningful way.
If nothing else, Dan, I guess, something disappointing tomorrow, even though I don't think it's anticipated at all or expected, and maybe it shouldn't be expected, could reintroduce volatility to this market. In a way, look, we had this outlier, 3 weeks ago, where we had the VIX spike, and then we've sort of calmed down again. We have an election 70 days, if not a little less away. Do we expect more volatility between now and then? And is NVIDIA something that reintroduces it?
I would separate NVIDIA from those other items you mentioned. They're idiosyncratic one-offs, if you will, specifically what happened with Japan, for instance. But in the case of NVIDIA, it's broader than that. And listen, again, no one expects anything negative to come out, although admittedly nobody ever expects anything negative to come out.
It's true. It's true. Look, you've been proven to be foolish to think that they're going to disappoint.
And especially when there was a story I was reading about Sergey Brin saying, and I don't know that he said it or not, but the story was that he said he'd rather go bankrupt than fall behind in this race. And so, to Shannon's point, for the next couple of quarters, that demand's going to be there. But if for some reason it was not, why it's different is because NVIDIA is the nucleus, if you will, in the concentric circles of risk. It's not just NVIDIA, it's Avago, it's Vertiv, it's Eaton, it's Vistra, we mentioned, it's all the ancillary plays that go into building out what is becoming the AI ecosystem, if you will. And NVIDIA at the center of it, if they were to come out and say, all right, well, demand is slowing, or it doesn't mean everything implodes immediately, but when you look back at what happened in 2000, there was a point where the numbers stopped going up as much, and then there was a point thereafter where the numbers stopped going up. And it happens in that succession, is the assumption. And we have not seen even the slowdown as of yet. And so investors of all stripes, whether you're in mega cap tech or not, given how important it's been to the market in general, you're looking for that slowing. But to Shannon's point and to my point, I'll reiterate, we haven't seen it yet. So,
all right, we'll make that the last word for this conversation.
James, especially when we do talk about this AI trade and NVIDIA tomorrow, how much does the next move in either direction for the market hinge on that?
I think a lot, Morgan, and good to see you. There's no question NVIDIA and all the Mag 7 are a big part of the S&P 500. So the way they go, the way the index goes, as you probably know, we're bullish on the NVIDIA trade for lots of reasons. There's a lot of skepticism, more than normal, around this print tomorrow. The stock hasn't done anything since June, which we think during that same period of time, there's been a lot of spending, a spending spree by Microsoft, Meta, and so on in this arms race to get more AI. So we think the numbers are going to beat or meet. So that means the stock market does well. And as far as the Fed pivot, that's sort of the last booster, we would say, of this bull market, the beginning of this bull market. It needs the Fed to turn. Now they have. We suggested they go 25, slow and steady. And the fourth quarter is going to be, I think, very, very productive for investors.
Speaking of tech, going to ask about the positioning you're seeing in the marketplace ahead of NVIDIA earnings tomorrow.
Well, they continue to buy. It's one of our clients' top holdings. It's something that when you do get the dip, pulled back to $90, we saw a lot of buying in the days that kind of led up to that August 5th, and then the days that followed that. So, that continues to kind of move. Expectations are that you're going to see anywhere between maybe a 10 or 11% up or down move based upon what the options market's pricing right now. And if there's anything, I would say it's bullish sentiment from our clients at this point.
Okay. Welcome back. Brace yourself for a huge show tomorrow. NVIDIA is set to report earnings in less than 24 hours right here on Overtime. We will break those results for you and get instant expert reaction. But first, let's get you set up for those earnings with our next guest, Harsh Kumar of Piper Sandler. Harsh, it's good to have you on. What are you looking for tomorrow, especially since it seems like everyone is expecting a beat and raise at this point?
Yeah, thank you, Morgan, for having me on your show. So the report tomorrow, it's going to be the big one. Historically, NVIDIA has been on a $2 billion beat and raise cadence. So let me explain that. They beat the actual quarter by $2 billion, and then they raised the guide by about $2 billion. But I think for the July quarter, the beat could be larger. If you recall, in the April quarter, they were short some networking chips. Those chips were now procured in the July quarter and sold. So the beat could be greater than $2 billion for the July quarter. But for the all-important guide, we are expecting strong trends for the Hopper 100 and the 200. The Blackwell chip, the new architecture, comes out in October, so it'll have a partial impact to the quarter. But we have heard stories that the Blackwell might possibly be delayed a bit. And if that's the case, the guide could be slightly short of $2 billion. But we're not worried because the customers literally have no other option. They will queue up and line up with bigger backlog onto NVIDIA. And I think NVIDIA is the best position from a rack performance angle. So we're not worried as long as the backlog keeps rising, the business will just shift by a quarter.
Okay. So with Blackwell, do you think that's already priced into the market, the expectations? Because there's been so many media reports that it could shift. And even if it does, it's shifting timeline, but not shifting because of fundamental issues or flaws or delays to the design?
Yeah, so that's a good point. So Blackwell is supremely, powerful as far as the performance comes. And like I said, the closest competitor is AMD, and they don't have anywhere close to the performance and probably won't for another year or so. So when the stories first came out, you saw the stock gap down quite sharply from 130-something to call it 90-something. And then in the next 2 weeks, you saw the stock make its way back up as people realize, hey, there's literally no other alternative, that the business will simply get shifted as opposed to get lost.
Okay, so clearly you have a buy rating on this name.
Yes.
Buy on a pullback, buy regardless?
I think buy regardless. This is one of those unique companies that I think will continue to see strong tailwinds from the data center plays for the next several years. And we're not seeing anything on the horizon that bothers us. You've got the Blackwell coming out, then pretty soon after that, you'll have the Grace Blackwell coming out, what Jensen likes to call the super chip. So based on the heels of that, we're expecting strong trends well into next year. I think at last count, they were sold out till the midpoint of next year. And I think with this particular earnings, that sold out situation could be pushed out a little bit more.
The market largely in wait and see mode with NVIDIA results due tomorrow. The AI giant up about 1.5% today, almost 160% for the year so far.
Now, listen, the move off the August 5th low is staggering. And here we are basically in terms of the S&P right back to prior all-time highs. I think that's encouraging. What I think is potentially worrisome is the fact that I think the VIX is still going to be a story. And, the market is doing this again, seemingly on a lack of real volume. I think it's just sort of this slow grind higher on the back of the anticipation of what we're going to see tomorrow and maybe in terms of the inflation data on Friday. I'll say this, the setup for NVIDIA, having rallied now almost 40-something% from that August 5th low, is eerily reminiscent of what we saw back in April, and then you saw that gap higher again. I am not as optimistic, but clearly that's what everybody, I think, is focused on right now.
I think I was here on this set with you guys last year, this week, during NVIDIA's earnings, and it didn't go well, if I'm remembering. It sort of stumbled.
Well, look, it went
up and then
and then it didn't stumble a whole lot more after that, though. So, I mean, the question really is, what should you be pricing in for kind of medium-term growth out of NVIDIA? I think that's what you have to get to. We know we're somewhere around 125% growth for this quarter. We know we're somewhere around 75% growth for next quarter. Actually, some expectation that you start to see re-acceleration. And again, these are year-over-year numbers for the progressive quarters. I think you're going to get to a place here where the market needs to understand just exactly what's going on. I think the more important point for the market is the AI spend so critical for the overall market story. That's why NVIDIA is the most important stock on planet Earth, or whoever we're calling it. I mean, there's a whole lot of probably hyperbole around it, but there's no questioning what's going on here.
What does what does NVIDIA represent in this market, Dan? And can the market go higher if NVIDIA doesn't?
Well, I think it can, actually. If you just see like some of the stuff that money is moving away from the Mag 7 and going to some other places. You just said it. I don't look at the Dow. You could put a gun to my head. I couldn't tell you where it's trading, but it just made a new all-time high. The only thing that suggests of those 30 stocks that are price weighted, they're moving higher, Yeah. And so when I think about NVIDIA, I think it's a lot of what these guys have said. It really is about expectations. I think as we get into the back half of the year and next year, you're going to have really difficult comps. Okay, you could say that up 100% this year in EPS growth and sales growth with margins that they've never seen before, upwards of 75% is great. It might be as good as it gets for a while. When you think about the guidance, they're likely to beat in this quarter. They've been talking about being capacity constrained. They've been talking about the demand. We saw all the CapEx numbers from their clients. When you think about 40% of their sales come from Microsoft, Google, Amazon, and Meta, we all saw them raise their CapEx. The question is whether they confirm this next iteration of these GPUs, this Blackwell chip, if it is going to be delayed and for how long. And then they could talk about the customer migration to these. So to me, that's really the risk. What really, like the guidance, and then what people are expecting in the back half of this year. Because year over year, you're seeing massive deceleration in earnings. Again, it's still up a lot year over year, but it's the decel in the forward guidance that I think
could the decel in hyperscaler investment in CapEx and AI be positive for them though, and negative for NVIDIA? In other words, at some point we were starting to push around Meta, we were starting to push around Google when we started to hear these CapEx numbers. They're a bigger part of the weighting. If you're just doing the math for the market, I mean, I wonder if an NVIDIA failure, the other side of that is back to a lot of those stocks that are in the Dow, but is rotation a good thing or a bad thing? In other words, NVIDIA's failure, does that lead to rotation, and is that positive? Was that happening anyway? And that's a big debate, because since we had that CPI, I think it was July 11th, you can make an argument that mega cap tech has been faltering relative to the rest of the market anyway. And a lot of people want to see that. A lot of people want to see the broadening of this rally. So I'm not sure what it means for, say, a Meta or a Google or an Amazon. If NVIDIA falls, it maybe means that they're spending a little bit less on the AI that we don't know is necessarily pricing near term into their profitability.
Well, of those three that you just mentioned, Google's the only one that's actually training a large language model, right? So for Google Cloud and Microsoft Azure and Amazon AWS, they're relying on these models on their platforms where other companies are coming and renting that compute for all intents and purposes. So again, when we go back to Q2 earnings, investors did not exactly love the CapEx spend that we saw. Microsoft sold off after their results. Amazon sold off. Google sold off. So to me, I think NVIDIA, if the guide is weak, I think the whole complex comes down.
Julie, you've been sitting there quietly, but I have been seeing you nodding at different points during the conversation. Jump in.
Yeah, no, I agree with Dan. I think people kind of underestimate the impact of the customer concentration that NVIDIA has. And so, were I a shareholder, the thing I would care the most about is, are we finally starting to see some broadening in their business? Because that de-risks the situation. And right now, with NVIDIA trading where it is, it's fragile, right? When you have this level of high expectations, high levels of growth, it introduces some fragility into its ability to trade well going forward. And so I think that's a really important question. I really do agree, though, it's in order for us to see a broadening and a healthy market where all of us on the desk have more conviction that this rally can continue, you have to see a broadening, not just in the market, but in the actual earnings. And what I continue to see when I listen to earnings calls is there's still some timidness in terms of the health of the consumer and the health of the macro and the geopolitical landscape. And so I think that that uncertainty is what causes these schizophrenic days where we have massive moves up and then massive moves down. There's just not the level of conviction that we need in order to have clear leadership long term.
Guy, you want to button it up for us?
I will. I'll say this. I mean, NVIDIA is supposed to do $120 billion of revenues this year, about 170, let's call it, next year, which is enormous growth. But in order to justify, I think, the price to sales at a $3.2 trillion market cap company, that 160 has to double. Now, if you think it's going to double over the next 5 years, as Dan would say, have at it. If you think the acceleration is going to slow down, then in terms of price to sales, this is a very expensive company.
All right, I hope you're all having a great day, staying calm in this market, and ready for NVIDIA earnings tomorrow after market close. Today, the S&P closed up just slightly, and NVIDIA finished the day up nearly 1.5%. As I've been saying for the past few videos or so, I've been expecting that NVIDIA would trade relatively flat ahead of earnings. The reasoning for this is simple. I don't think many people want to bet against NVIDIA ahead of earnings, as that has not worked out well in recent quarters, and at the same time, I don't think many market participants want to buy into NVIDIA until after we get earnings guidance and clarity on the situation surrounding Blackwell. I think NVIDIA's relatively flat price action over the past week is evidence of this. We are in a temporary waiting period ahead of earnings. Now, as for tomorrow, I would not be surprised if we see some volatility tomorrow as traders and investors have their last chance to position themselves ahead of NVIDIA's earnings. I think NVIDIA will likely report a great quarter, but I cannot in all honesty tell you how the market will react. If the market reacts positively, I would be looking for a retest of the all-time highs. If the market reacts negatively following earnings, then I would be looking for a retest of the support trend line that stretches all the way back to January of this year. Like I said, I think NVIDIA likely reports a great quarter. I just don't know how the market will react because expectations are so very high right now. I think it is reasonable to expect that NVIDIA beats expectations on revenue and EPS, but the real focus tomorrow will be on NVIDIA's forward-looking guidance and what they say about Blackwell. If NVIDIA can raise guidance for next quarter by $2 billion or more, and at the same time calm market participants' concerns about Blackwell, then I think the stock likely trades higher following earnings. I think it is entirely possible for NVIDIA to do this. Of course, I do not know what the future holds, and I could be completely wrong. With that being said, I think it's important to remember that all of the hyperscalers, Microsoft, Amazon, Meta, Google, and Tesla said that they intend to increase CapEx spending on AI, and they guided up on future CapEx spending by billions of dollars. So with this in mind, I think it is entirely possible for NVIDIA to raise guidance substantially. The question, though, is whether or not it will be good enough to meet investors' lofty expectations. As I mentioned in yesterday's video, the absolute best case perfect scenario for NVIDIA earnings would be that they beat on revenue by billions of dollars, raise guidance for next quarter by $2 billion or more, report growing profit margins, calm concerns about Blackwell and say that Blackwell is still on track, announce that China-centric chips are on the way, increase the cash dividend, and announce a share buyback. That would be the ideal picture-perfect scenario for NVIDIA earnings tomorrow. Now, I'll be honest, I don't know if we will get all of that. The main topics to focus on, though, at least in my opinion, are forward-looking guidance and NVIDIA's comments about Blackwell. If forward-looking guidance comes in substantially better than expected and Blackwell is still on track, then I think the stock likely trades higher following earnings. While I don't know what will happen in the short term, because anything could happen, I am bullish on the long-term future of NVIDIA. The hyperscalers simply cannot afford to be late on AI, or else they will quickly be outpaced by their competition. I think it is likely that we have at least one more year of both solid growth in NVIDIA and a maintaining of the current multiple, or possibly even an expansion of the multiple. Hyperscalers' CapEx is increasing by billions. China-centric chips are likely on the way. Blackwell is on the horizon. NVIDIA has such large margins and so much cash that they could increase the cash dividend and authorize a share buyback if they wanted to do so. And on top of all of that, we likely have rate cuts coming later this year, which could provide a nice macro tailwind as we move forward. At least that's how I view the current situation. With all of that being said, remember to stay calm tomorrow, as we will likely experience some volatility. I hope you're all having a great day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.